Hey guys, wanted to go over this because I was talking to somebody about a single family house that they want to invest in, and they were asking me like, "Do you think this is a good investment?" And I was like, "As an investment, no single family house is a good investment because there's things like people confuse real estate investing with single family house investing, man. It's not the same thing, period, no matter how hard you cut it. And we're not talking about the process. We're talking about an actual investment, an investment of money, time, energy. So I'm going to go over this again. I go over this a lot. And I'm biased because I'm a real estate guy, but bear in mind, man, I've been doing real estate for 27 years. I have a real estate fund. We have Bell Capital. I structured this because I know because I bought single family houses, lots of them, multifamily properties, apartment buildings, retail building, vacant land, an office building. Like I've done all of that stuff. I've negotiated the debt, good debt, bad debt with banks, hard money lenders, private lenders, all the same thing because we are talking about investing your money. Right. So this, I looked at this like this isn't a like all real estate's not created equal. So I want to go over this with you really fast as an investment because this guy said, "Hey, do you think it's a good investment? Single family house, a home is not a good investment, period. End of story." So apartments versus single family. And when I'm talking to you guys, I'm just sharing with you what worked for me, right? You just pick whatever for you. You can gamble your money, but that's not interesting to me as it relates to making investments. So, number one, I think about it like this. Number one, your investment, whatever you take your money out of the bank, you trade time for money and you put it into an investment, stocks, whatever. It should do a couple things. Number one, it should protect your money, protect your capital. So, when I'm talking about apartments, I'm talking about 100, 200 unit apartment buildings. It could be a 20 unit building, a 30 unit building versus a house, a single family house, whether you're going to live in it or whether it's going to be a tenant, rental, whatever. Does it protect your capital? Apartments protect your capital. Single family houses do not. So right off the bat, apartments, yes. Single family houses do not protect your capital. Yes, you can take your money out of the bank and put it there, but the problem is you might not be able to keep it because the next one, right? We're talking about investing money, right? Like I don't know, that shouldn't be confusing for you guys. Is something a good investment versus something better? So number one, do apartments protect your capital? Yes, they do. Does single family protect your capital? Yeah, I mean it's a real asset. So let's make it equal. Let's say it's somewhat equal so it does protect your capital as it relates to just not being able to be in the stock market or a mutual fund where like today or tomorrow you wake up and it's gone or it's less valuable, right? So yeah, it's kind of equal, but because it's a real asset, it's still not the same thing. So number two, does it provide passive income? Right? So apartment buildings do. And does a single family house provide passive income? If you have a tenant in there, not really, because why? If the tenant call, you can't get a property management company that's not going to take the majority of your cash flow, minus your debt, minus your taxes, insurance, costs, maintenance, blah, blah, blah. There's still what you have to bear in mind. There's still time. So let's say your tenant calls you. Now you got to pick up the phone, call somebody else. You got to get them to do this. It's not passive, it's very active. So, single family house, no, it's not an active investment if you're going to think about it from that perspective. You got to put some time and energy into it. Even if you have partners, you're dealing with your partners. So, number two, so you can tell it's not passive. It's not, it doesn't provide passive income. Apartment buildings do. Professional management company. You can JV and partner with somebody. I'm not, there you go. Come back in. There you go. You can JV and partner with somebody like me. You can get on a phone call with somebody like me because we've already managed the tenants, the toilets, the termites, found the deal, fund the deal, manage the deal, raise all the money, do all the taxes and stuff like that. K1s. Everything's done, right? You don't have that in a single family house. You're going to be doing this yourself. Next, long-term appreciation. That's LT appreciation long-term. Does it provide long-term appreciation? Does it go up over time? Absolutely for apartment buildings. And oh, by the way, you can force appreciation. You can force it appreciation, or what I like to say, controlled appreciation. I can raise the income of that apartment building, right? 100 units. If I raise the income by $100 or whatever, like the value of the asset goes up of the investment, right? So we make more money because the income went up. But if you have a single family house, you can't force any appreciation. And I was just talking about this with my buddy who has a property. He was like, it looks like the values kind of go up and down, and I don't understand why, because he has a townhouse that he bought that's a rental for him, and he's like, dang, what's going on? And I was like, well, let's say you owe 700,000 or 800,000 on this property. and it's worth $1 million. You owe 700, it's worth 1 million. Let's say the same person in the same townhouse community, the values are worth $1 million, but instead of owing 700,000, let's say they only owe 300. They can sell for 900 and still make more money than you. And now the values in that community are 900,000 because that's a comp. You don't have that going on with apartments. It's based on the value of the property, right? Nobody's going to dispute that. It makes the money, it's worth the value as it relates to buying the property because you're buying the income of the property. So, based on that, no, single family house does not have long term appreciation, forced appreciation, and it doesn't have controlled appreciation. All right, next, tax write offs. Yes, apartment buildings has massive amounts of tax write offs. You got depreciation, cost segregation, which is, like you can accelerate, accelerate the depreciation over a shorter period of time. So you get passed on to that as an investment opportunity as an investor. You don't get, well, you do get your tax write-offs from single family houses, but it's not big. It's not big enough at scale to do anything. You got one door, you got a roof, you got, the structure, you got the dirt, which you can't write off. I mean, the tax to depreciate the land, you can only depreciate the structure. Apartment buildings, you got 100 refrigerators, 100 washer dryers, you got 100 light fixtures, you got flooring, you got the roofs, you got parking lots, you got all the different ways that you could actually get it. If you have a debt on an apartment building that, let's say the debt's $40 million and you got interest on there, you can write out the interest. You aren't going to be able to write, you can write out the interest on single family house, but you're not going to get the bang for your buck if you're an investor in an apartment building versus just your single family house. So do you have it? No. I'll say it's equal, but it's really not equal. It's not the same thing. 100 units versus 1 unit. 500 units in one address versus 1 unit. You're not going to get the major tax write-offs that you're going to get the major benefits that you're looking for. Next, it protects you against inflation. Yes, it does do that for apartment buildings. For single family houses, does it protect you against inflation? Not really, because if you can't control the value of your asset going up over time, yes, it will go up over time. So there's some inflationary hedge, but you're not going to really take advantage of it because you can't keep raising the rents fast enough in 1 unit versus if you have 100 units where you can raise the rent and it's staggered out every quarter, every month, 2 quarters. Like you can adjust the value faster. You don't get that if you have a single family house and that's your only investment opportunity. All right. Next, is it easy to finance? Right now, neither of them are easier to finance, but for single family houses, yes, you can get financing, but the problem isn't getting them financed for single. It's easier to get an apartment building finance. You can go to Fannie Mae, you can go to Freddie Mac. You can go to the life insurance company, which they fund these bigger deals. You can go to a debt fund. You can go to anybody, like you can go to mezzanine, bridge financing, all the different ways you can finance an apartment building because it's based on the revenue, the income of the building. But if you get a single family house, it's based on you. It's not based on anything. You're qualifying for it. In apartment buildings, the actual apartment building is qualifying for it because you're buying a business when you're buying an apartment building or you're buying a multifamily, even if it's 30 units. Anything 5 units or above is considered commercial. It's still small, but they're going to look at the income of the building. Lately, they've been like, yeah, you can do a DSCR loan for single family houses, but the problem is if that person moves out, they're still looking at you, and you still got to have some experience, and you don't have it. So, and we're talking about investing, passively putting money. I'm going to buy a deal, rent it out. It's hard enough as it is. So, easy to finance, way easier to finance an apartment building. It is not as easy to finance a single family house, no matter whether you're a DSCR. You're still going to have some skin in the game, and people are going to be looking at you because you only got one tenant, period. So, next, it's easy to scale. Yes, it's easy to scale your apartment building. Why? Because you can hire a professional property management team. You can, just like us, we're like professional property management. We have people working with us, accountants, CPAs, legal attorneys, SEC people. I can scale a lot faster than you can with single family. That's why I started Bell Capital, because I was like, how do I scale the business? I want a real estate company. So we had apartment buildings, we had single family houses, but there's not scale in there unless we actually go big and move to institutional stuff and build a company around a fund, um, employees, things like that. You can't do that with single family. I hear some people like, oh, we have like 120 single family houses, but all of them are like, geez, I wish I can get out of that and I can trade this in and I can get an apartment complex that have 120 units all on one address. Like that's the goal of everybody that starts to become an investor. And I'm talking about passive investor. If you're a passive investor, you ain't scaling anything. It's not easy to scale a single family house. Like you're going to be working. You move from passive to very active very fast, and that sucks. Ask me how I know. So you can easily scale apartments. You cannot easily scale here. So, and then I wrote it over here. Single family, like for being hard to disrupt. It's really hard to disrupt housing for apartment buildings. Like if you're an investor in an apartment building, AI is not going to take it away. Bitcoin's not going to take it away. You can't live in your freaking Coinbase purse or whatever, and you also cannot live in your phone app ever, ever, ever. So it's very hard. Housing and apartment buildings is hard to disrupt. Single family houses are very hard to disrupt. So that's actually a plus for both of them. And liquid. You are not liquid if you invest in real estate. Boom. Apartments or single family houses. And here's why that's important. Because if you make an investment in a single family house, you can't just press a button and sell. The same way it's hard to disrupt. You can't lose your money really fast. You also can't sell really fast and get out of that situation. It takes an activity, right? You need a broker, you need a professional, it's got to get on the market, it's got to be presentable, it's got to be ready to go. Same thing with apartment buildings. It's called a process, an apartment. You got to run a process. So that means you bring it to market, talk to a broker, get a BVO or a BOV, whatever they call it, like they alternate them, broker opinion of value or broker value opinion. They tell you what it's worth. You start preparing it. You get your property management company. You start cleaning the property up. If it wasn't already, it should have been. Getting your financials in order, giving it to a broker. Like there's a process. So that's what I mean by like it's not an illiquid investment. So you can't just get your money out because it takes some activity to get rid of it. So that's why it's not a stock. It's not a mutual fund or anything like that. So now I went through all this to say that for me, apartments are better than single family houses. So if you invest in single family houses, great. But for me, when I think about it as a business, creating wealth, protecting my money, protecting my investors' money, and decision making, apartments always are going to beat single family investment hands down because let's face it, man, it has more check marks than this one over here. And even if it's somewhat equal because it's real estate, it's a real asset to put your money into, it still doesn't beat all the benefits that go along with investing your money in apartments. So the other problem with single family houses is you got to keep it. It's great if you can get one, but if you can't keep it, you have a problem. I talked to a guy that's working through something today. He's got a great opportunity. He's got this deal, but he's losing the deal. He can't afford to keep it. And he's worrying about this equity that's truly going to go away if he doesn't do something about it. And that's the game. So like no matter whether you look at it like an investment or not, if you can't keep it, it's not an investment. It's a liability. If you invest in an apartment building, your money's there, it's cash flowing every month. You can weather any storm as long as it's cash flowing. So you got to make sure one, your deals protect your capital, the deal cash flows, you can get good debt and good leverage on the property, which most apartment buildings you can. You can't do that with single family houses. It's questionable. And then last but not least, there's some form of scale. You get the tax benefits and write-offs. Like that's a good investment. So if you're gonna, I mean, you can pick what you want. If it's not real estate, I get it. Go do something else. You can do Bitcoin. You can do your own business. Even your own apartments are better than your own business as well. 8 out of 10 businesses fail. There's only 7 big companies on the stock market, Mag 7, that are keeping the whole S&P up and running. That's a rough place to be. Like businesses on the stock market and things like that are lasting somewhere around 7 years now. Before they used to last 50 years. Like things have changed so fast. So if you're going to take your investment capital and say, I'm going to invest in my business, yeah, do that to generate revenue, but don't confuse that with passive investing. That's not. You got to make that money back. And if you can invest in apartments, that's a better deal to play. Or don't think that single family homes is a good investment or investing in your own home, living in it, moving in it. You become the tenant because now you have to afford to pay to play. And if you can't do it anymore, you got to move out and exit that deal if you can exit it and make your money back because there's components in that too. I won't go over the cost of home ownership because I don't want to make you hate me early. But anyways, think about this, man. Just ask yourself, if you're talking about investing in single family houses or investing in real estate, single family houses is not an investment, it's a job. You're going to have to do all this stuff. And you need to make sure that you have a better understanding of when, like, you're not doing real estate, guys. You're investing. Just like you invest in stocks or bonds or T-bills, or you have money sitting in a retirement account that gets invested for you in mutual funds or whatever. You're taking your hard-earned money that you worked your ass off for and traded time, and you're investing it in a vehicle. Real estate is a vehicle, but all real estate is not created equal, right? Apartment buildings to me are the superior real estate play for most investors because it's simple, it's housing. People always need a place to live, but not everybody wants to live in a single family house. So, if you're going to invest your money, put it in a place where you have the highest chance of success. And I can tell you, apartment buildings are the way to go. If you want to do that with us, you can go to bell-capital.com. You can either schedule a call with us, find out what it takes. If like, hey Vic, I got money in a retirement account, I want to switch to self-directed. How do I do that? Or I got cash, money market, savings account. We're liquid. We can do that. How do we do it with you guys? And I can put you with myself or somebody on my team. We can go over your specific scenario and talk to you about how to get started with us at Bell Capital and some of the deals that we got going on. Heavy push happening. I'm going to be closing a lot of real estate this year in 26, and I want to do it with you guys. All right, so let me know if you guys need anything. Have a great day today. I hope this helped you. If you're confused, man, let me tell you, a house is not a great investment. If you're going to invest in multifamily properties. Multiple doors keeps the lights on. Trust me. I can't even stress that with you, man. That's huge. All right. So if you don't get anything else from that, get that. Single family houses are not the best investment. You need to invest in something that pays you every month while you work and do the thing that you do, and you don't have to trade time for money. All right. Have a great day today. Let's get after it. Boom.